Great overview, Paulie.
Oh, hey, Dale. How you doing?
Good, buddy. Welcome aboard. We're filling out our roster with you for the FX fantasy team. In light of everyone playing NFL fantasy teams,
Oh, okay.
we now have an FX trading fantasy team with
Oh,
you
my
on
goodness.
board. All right, so great to have you on board. Always respected your work, and I was listening, and what a great review for people.
No, thank you very much. I mean, I appreciate it. Thank you very much, Dale. And like I said, most of our trading is going to be focused on short term from 24 to tops 72 hours, but most of it, the levels that we have is over the next 24 hours, that same day or into the next session. So really short term trading, I guess they can combine that with the excellent analysis that we get from the other providers too, other guests.
Yeah, great to have someone short term because, you know, that's fits a lot of people's personality. A lot of people don't like to hold things overnight. They just want to get it done, call it a day, bank some pips, and move on. So really, we needed you. Glad to have you.
Well, I'm glad to be aboard, and I appreciate the opportunity.
All right, buddy.
Part of the team.
All right, man. So everyone, you know, it's great to have Paulie with us. And you know what else? It's great to be back. It's time to go back to school. So after Labor Day, we all went back to school and started getting serious. The vacation is over, and we all have our new lunch boxes. So let's fill them up with pips because they're empty right now. Okay? So let's take a look at a few things. You know, guys, being a trader is kind of like being in the mafia or Hotel California. You could check out, but you can never leave. Not many people retire from the mafia, at least vertically, mainly horizontally. So even though I was away, I was keeping an eye on things and doing a few things. And you know, big focus the last couple of weeks has been with what's happening in emerging markets. That's causing some upset, definitely meltdown in emerging market equities and their currencies, while the U.S. has been holding up the best, followed by Europe and Japan. And I remember about a month ago when Turkey was in the middle of this, and you know, we think that, or at least I was told by a source that they saved it temporarily with a lot of selling of gold. They did nothing with interest rates or anything. But when you have an RSI reading in a lira of, I think it's over 90 here. It's right around 90 on this spike. That's usually just a top, not the top. So, you know, I don't know if we're going to blast to new highs right away or we get, you know, some type of ABC, but I could say there's a high probability this isn't the end of it. And there could be another 1 or 2 cycles of new highs coming in the lira that may put some pressure on markets and create some risk off. Okay. Yes, there is sound. You may want to log in, log out, Joshua. So the other currency that, and there's so many on the table. Everyone hear me okay? Give me a Y if you can hear me. How about you?
I can hear you loud and clear, Dale.
All right,
Welcome
buddy.
back.
Great to be back, Sappy. I missed all you guys. So here's the other one. I mean, there's so many currency pots bubbling on the stove. You never know which one's going to bubble over first. And, you know, the Chinese took some measures to try and drag it down, but nothing looks that bearish to me in the yuan here. So, you know, I don't know if it's done. Why can't we see 7 again? And here we are again, more tariffs being put on. So the yuan is another, you know, pot on the oven, bubbling over. And there, you know, you have the Hong Kong dollar, they're intervening, the rupee. So everything it's about the dollar, and even, you know, our competitors like the euro has been under pressure. I don't think it's over. I saw it last week. traded a little bit. I know a lot of people are thinking this might be the support level to go for it. I think we have some more room to the downside. I was looking to get short around 1640 to 60. When I went to sleep, the high was 27. You know, you should always just put your toe in the water in case it doesn't get there. So now I really don't know what to do. I don't think we're just going to shoot to new highs in the euro. So I still lean towards selling rallies and think that we'll at least penetrate the 115 handle to shake out some more people that are bullish. And I'm not sure how the COT is looking or the DSI is looking after last week's break, but I'm sure there's still plenty of too many dollar bulls, too many euro bears. So I'm not saying that this is going to be the beginning of a big decline to new lows. I'm seeing it more or less as we had this, and now we're going to have this corrective wave that, you know, may go 61.8, may go 78.6. And then I think we have one more of these from wherever the turn comes in the dollar, which, you know, if it comes from 1450, that's going to give you over 118. And if it's a fib extension, that's how you could get to where everyone wants to sell it, back at 120. Okay, so that's my view on the dollar and the euro. Could be setting up a buying opportunity, but I don't think we're there yet. Maybe a turnaround Tuesday. Also, you know, guys, I did keep an eye on the team, and, you know, there were some great pattern and plays while I was gone. You know, Andre caught the silver. There were all kinds of great pattern and plays that took place, and we're entering this fall trading season. So I really encourage you guys to become a subscriber, because this business is not about the if. The art of it is the when. Okay, so the when happens with all these updates that I get. You would get them to, you know, all through the day. So, you know, look, and you could have it on your mobile phone. So you're being updated all day long. I mean, if I had said maybe 2 years ago, you could pick Blake Morrow's brain, Greg Horvat's brain, Steve Volge's brain, Stelios Kontos' brain, Andre's brain, Amanda's brain, and now Paulie's brain for $100 a month, you would have said, "Oh, you're kidding me." So I think it's going to be an exciting September and all the way into the midterms. So you want to be prepared and put the team on your side, and all you have to do is click. Also, if you're not satisfied with what you have as far as an FX broker, Justin and Trent are the guys to go to. Just click it here. If you're outside the US, you could get involved in the reimbursement program. But these guys know everyone. Okay, so you're going to have an option. You tell them what you're looking for, whether it's spreads, ECN, whatever type of broker that you would prefer to work with, and they'll find you a good home. And it's not going to cost you any more because you talk to these guys, because they have scale. Okay, everyone with me? So I just have a couple more markets I want to talk about here. Why don't we get to what's happening here in the Dow? So while I was gone, we had a nice little throw over right here. Throw over, which makes shorts that are playing a wedge line regurgitate. And then late last week, we started trading underneath it. We tried it again last night. And this is your relative weakness of all the indexes. Also, Steve talked about a target in Russell that was finally achieved, and it's not making much progress. I think it was a 172.80 level was a long-term fib count. And we got there. People are going, well, you know, it's not working. Well, just because it doesn't crash immediately and we're at 173 does not mean that that area is not valid. Look at all the divergence you have. But you're not going to know if you have a failure really until you start closing back under this triangle line. which is a shade under 170. So this started to lose momentum against the rest of the market last week as it approached that fib level, target level. The Dow is a weakness, and followed by the S&P, and you had a throw over in the S&P, and now you're testing it. You actually poke through it. So as you can see, the Dow is behaving and doing business underneath it. The S&P is trying to hold it, and the NASDAQ, which was a relative weakness for a while, turned into the spaceship with actually a breakout of an ascending triangle here. So if we get a correction, possibly back towards this breakout area would be a good place to think about the long side of NASDAQ, or if you're like me and you've been fighting it, to take something in. So I think the indexes are vulnerable. I know it's the first time you guys heard me say that. And I just want to leave you with one more thought, and it has a lot to do with relative strength. How many people listened to Grega's Look at the Week Ahead video this week? Give me a Y if you have. Okay. So I noticed this last week. I said silver was going to break to new lows when it was way underperforming. The gold, here we are at new lows. We are diverging on a 4-hour between this and that. But why would you want to buy something at new lows? Why not go with the relative strength? So the gold's not close to new lows. So if I want to be long a precious metal, I don't want to, be long the weakness. I would short the weakness on strength and buy the strength on weakness. Everyone with me on that? So that's your gold and silver, how I'm looking at the euro, your stock indexes, and it's great to be back, and wishing everyone good fortune in this fall trading season.
Hey, Dale.
Hey, Steve, how are you, buddy?
We missed you, I have to say.
Oh, wow.
We missed you, and we definitely missed abusing your Skype.
All right. It's great to be back, Steve, and things are heating up. I think that's great.
Yeah, absolutely. I think we'll have a nice,
all the hedgies are back from the Hampton. They took their helicopter ride back to their Park Avenue penthouse, and they're slinging money around. So I missed you guys too, because I was still looking at the markets, and for me every day it's an edge. And what another great edge we have with Paulie with us now.
Absolutely.
For shorter term guys, really great ad.
Absolutely. I don't want to interrupt you. You were about to talk about the Forest Park effects, and then Blake is going to take over, and I'm going to be for the last half an hour. Okay. I just wanted to welcome you back.
Thank you, Steve. And we do have an interview today, Glenn Howell. I believe he's from South Africa, and they're having problems down there too. So, we'll talk about it. I don't know why they call South Africa an emerging market, because, it's been emerging and submerging for decades. But anyway, we have a very good guest. We'll talk about what's happening on the ground there with the USD. I believe it's ZAR, right? ZAR is the South African rand. And really get a hold of Justin and Trent. And again, traders, there's no law against having more than one account. I mean, sometimes you don't know what you have until you compare it against another. So you may want to open a small account somewhere else and feel it out, or at least, go their demo. And there might be a better place for you to be executing. And with that being said, Blake, I saw the photo of Flagstaff yesterday, made me a little melancholy. I slipped on Slide Rock quite a few times, and great to be back with you, buddy.
Hey, welcome back, Dale. How are you?
Let me tell you, I was real nervous about being able to wake up at 3:30 today, Blake.
It's
it's kind of like I was staring at the clock, and but anyway, here I am.
Yeah,
And
no, glad you made it, and we missed you. Like Steve said, we missed having you around, and it was I hope it was a good 2 weeks off for you.
it was, buddy.
Awesome.
I saw a great concert. I know you want to get to the market, but I just want to say one thing. You probably don't remember him. His name's Peter Frampton.
Oh, of course.
Okay, in the 70s, he did a very, it was a gold record, but he didn't win a Grammy or anything, called Frampton Live, and now he's about 65. So the guy had no Grammys or anything until many years later, and it was for an instrumental album. And this guy tours still. He's my age. He was on stage and as good or better than he was 40 years ago, and still loving it. And that inspired me that if you do something you really enjoy doing, your age doesn't matter, and you could keep rolling with passion even after doing something for 40 years. And he demonstrated that to me. So it was a great show. Surprised me to the upside.
That's awesome. Those are always the best ones, right?
Yeah. I wasn't, his songs were kind of bubblegummy, but guy could play guitar, really had a great band, and very inspiring to see a 65-year-old guy who still rocks as good as he ever did. A lot of guys lose their voice and they have to change the key of their music because they can't get up to those notes anymore. And he was great. So anyway, inspiring to me.
That's awesome.
There's hope for old men. That's the bottom line.
100% there is. I'm hoping there is too.
All right. So how's it going, buddy?
Good. Obviously we've got some volatility coming back to the market, so I'm gonna I'll take it with the charts here. If you take a step back and you look at the dollar, I gotta stop for a moment and realize what the dollar kind of left traders at both ends of the spectrum kind of confused, and because I after coming back after being away from the markets for a couple of days myself. The dollar, we had this, this head and shoulder pattern that we looked like we're going to play out. And then we broke back on Friday, back above 95. And here we are, have extended ourselves. We're obviously a little overbought now at this point, but you can see anybody who is short the dollar. And by the way, I was long the cable, got stopped out of that on my longs, and our pattern play got taken out. Fortunately, all the stops were moved up, but you're kind of left at this point in time, with the question, what do I do now? And it's a little bit of a quagmire because you're coming into the beginning of September. Markets are obviously very elevated. We're down a little bit this morning. We're bouncing back a little bit here in equities, but overall, the equity markets are still, for all intents and purposes, very overbought. So if they start to roll over, what's the dollar's role in that? How's the dollar going to respond to? How's the dollar going to respond in the event that we start to see some selling pressure in equities? And I think we have to, take that into account moving forward. But I look at the dollar at this moment in time. This is, this is just an hourly. So let's go on the daily. Here's the dollar index. I mean, what do you do with this? And I don't know if there's a clear-cut answer at this point in time. Because, like I said, we had a head and shoulder pattern that was trying to play out, and nice little breakdown. That was a failed breakout. But do you really want to get long, the dollar at this point in time, knowing that we that relative strength has been divergent on this whole move up, and it's like I don't know if I really want to be long the dollar again either. But with taking a step back and saying there's this issue right now with emerging market currencies. You're seeing the yuan that's weak. You're seeing the lira that's still weak. Will the dollar be used as the currency of last resort, if you will, as being bought from a risk aversion standpoint, and that very well could be. So it's really kind of tough at this point. It's tough. It's a tough call on how to play the dollar, in my opinion. And that's, you know, so I think we're going to take a few days probably here to really let the dust settle and see where, you know, where we reside. Because technically, you know, I'll just take a look at some of these majors really quick, and I'm not going to go through them as thoroughly as Paul did, because Paul, you know, if you guys didn't catch Paul Franco, which, by the way, Paul did a great job this morning. He is now broadcasting an hour before the FACE webinar starts. So you guys use the same link and listen into Paul Franco. A great addition to the team. I'm so happy to have him back on my team, since, you know, him and I worked together at the Wise Trade Group, and I brought him on years ago. It's great to have him here with the ForexAnalytix crew. He did an awesome overview of all the majors, and plus some of the indexes and crude and precious metals. So you have to go back and make sure you listen to him, or, you know, make sure you listen in the morning, an hour before the FACE webinar, to get some of these major levels that we were testing. But I'm not going to go through them all today, but I will tell you that I think that like you take the euro dollar in this previous head and shoulder pattern, we're really going to have to hold the support down here, and we might dip down towards, you can see this, you know, 50% retracement comes in at 151 or 151, excuse me, 115.17 level. That could ultimately be tested, where we just, you know, take some stops below that support. But we also could be, and let me draw this out for you guys. We could be making, you know, a series of, you know, higher highs and higher lows. And so if we stop here and we start making our way higher, we could eventually, you know, make it up towards 118. You know, that I don't think we can write off the euro right now. And I think that what's going to be really interesting is how do we respond down here at the 50% retracement, or at this previous support down here. I think these are going to be really key levels here over the next 24 to 48 hours to see the price action, the price action response to some of these prices. And again, I'm not really super excited about the dollar at the moment. I did pick up some pound this morning at 24, so I bought some earlier this morning, because we came out of this, you know, we came out of this this breakdown. We broke through and gapped down, and I think this gap still needs to be filled here. Not necessarily today, but from the weekend, we still need to make it up to 129.50. And I'll get a little bit more excited about the cable if we break above like this 128.50, which is only 15 pips away, which could be taken out this morning. So, you know, we break through that resistance. We have this descending wedge that we can play back up to 129.50. I think that's entirely possible. I don't want to get so aggressive because I don't think it's clear. I don't think a direction at this point in time is really clear for the market at this moment. I'm not feeling, you know, super strong about dollar strength or dollar weakness. A couple other things that I should point out, like the Aussie dollar, we did hit the 161% extension, so we hit a new trend low, and then now we're bouncing. So, you know, you got to think about that the Aussie's starting to show a little bit of life down here. What does that mean for risk or risk appetite? You know, if you look at equities, yeah, equities were selling off this morning, but really, you know, for all intents and purposes, we held support here on an hourly basis. So I think if you're aggressively selling risk at this moment, you got to be a little bit careful. All right, so the Aussie looks like we can lift from the support. I think if we can hold above 151, or 71.60, you know, there's a chance that the Aussie bounces back. The Kiwi also is holding some support down here. You know, you can see where we briefly hit new lows, and now we're bouncing a little bit. The dollar Canadian is very strong this morning. You know, the worries about not getting some sort of NAFTA deal done is obviously weighing on the the Canadian currency, and even the U.S. dollar Mexican peso broke, at least near term, we broke above this 1940, but we might actually have a false breakout here in the peso. So if the U.S. dollar Mexican peso slips back below 1930, then I think the risk is that we got a false breakout in the peso, which, you know, we took out all these stops, which, you know, could reverse. I mean, it's you know, again, all this is all this whole movement is all predicated on whether or not the U.S. can put enough pressure on Mexico and Canada to put together a new NAFTA deal. And last but not least, we should take a real quick look before I pass it over to Steve. The U.S. dollar Japanese yen. The U.S. dollar Japanese yen. We came out of this descending wedge. We almost hit the 618 around the 111.88 level. We've kind of been bouncing around. I'm not super excited about the dollar yen just yet, but I think we need to watch this zone. And, you know, if we start breaking, you know, out of that zone to the upside, that's probably a good sign for risk appetite. If we start breaking below like the 110.60 level, you know, that's probably letting us know that some risk aversion might be seeping into the market. And one last thing, actually, and I'll let Steve really expand on this, is precious metals. Both gold and silver are weak. Gold is touching the 38% retracement here. And silver has been really just, I mean, we hit new trend lows. We broke below this 1430 level, and we traded to new lows in the silver index as we're still holding this, you know, strong down channel. So silver and gold both look a little weaker at this moment, but we'll see how.
Blake.
Yeah. Yes, Steve.
Good morning, my friend. Sorry to interrupt you, but on the last webinar, actually, I specifically had mentioned that I see the danger of silver breaking down to a new low. And what I said, and I don't know if you agree with that, is that I see the potential for perhaps silver giving us a new low and gold not. And, you know, very often these kind of divergences might also indicate a turn in the market. So I was actually more or less looking forward to it. And I have to say that I don't know. Yeah, and I don't know about you, Blake, but I think that the way gold has been falling is definitely not impulsive in nature, right?
It's acting like a champion, Steve.
Yeah, it doesn't seem to be depreciating like in an impulsive form after we go that spike higher. So, you know, this is what I drew like last week, and I still believe that we can see gold thrust higher once again. And, you know, perhaps this divergence with silver posting a new low and gold not might also, you know, end up meaning something.
Yeah, it definitely can, and I think if silver can get back above the breakdown point at 1430, that might be your cue to be maybe even long some gold down here.
Yep, absolutely. Right. So I keep finding gold decently attractive, I have to say.
Awesome. Well.
How was your extended weekend?
It was really nice. The weather is beautiful up in Flagstaff, and Dale, as you know, it's one of the most it's one of the prettiest places. It's like a little slice of Colorado, I guess, you know, in Arizona. So it's a really nice place. I had a great weekend, enjoyed nice family time, extended games of Monopoly.
Sounds nice.
Yeah, it was great.
So you go to play Central Bunker.
Your boys were sleeping because they did an all-night Monopoly
yeah,
game or what?
My boys school me. They're hardcore negotiators. They run me over.
I wonder where they got that from.
Yeah, from their mom. Anyway,
obviously, Dale, they've set their eyes in taking Powell's place.
Right. Right. Yeah. Well, Steve, I'm going to let you take over. Dale, welcome back. Paulie, I know he did such a great job. It's great to have him on the team, and I know Stelios is tuning in as well. And big shout out to Grego Horvat for putting together the week ahead video and letting me take the weekend off. So, thank you guys. What a great team! And make sure you visit Forest Park FX, our sponsor to the Face webinar. So you guys have a great one. Thanks, everybody.
And Steve, before you get started, I just want to remind everyone that Blake's not getting in his car or going on the road. He's going into members chat, and being a member, you know, you could be asking Blake questions. He's there for hours a day. And Steve, I know you spend a lot of time there, and Amanda's there. So just another power area for ForexAnalytix is the members chat for the rest of the day and even into the evening hours. So, okay, buddy. Interested in hearing Mr. Confirmation again.
Once again, yeah, we have some things that actually do matter, and I actually wrote in the chat room about some of them yesterday. I know that things were very slow, but some things were moving, not a lot of them. And I'm gonna immediately show what I'm talking about. But once again, Dale, welcome back. We really missed you, and I bet that people missed some of the wonderful interviews that you also, you know, make happen.
Oh, thanks, Steve. Thank you very much. Good to be here.
Good to have you. So one of them, USD CAD. I was pointing yesterday to the possibility of USD CAD resuming to the upside. I think that, you know, this perfect retest of this descending, the broken descending trend line resistance as support. I kept saying that I'm bullish as long as we remain above 128.50, because 128.50 was also a nice triple confluence of supports. We actually never made it there because, as it seems, this broken trend line resistance acted as support perfectly, so we didn't have to plunge lower to get there. And now, as you see, we're breaking above this channel. We kept saying that this price action contained within this channel was definitely not bearish. It was looking like a consolidation, like a correction lower. And I do think that now that USD CAD is actually decisively clearing this level, we should be looking for 133 as a first target. And
well, Dale, one thing that we've had the last 2 sessions only is this thing with Steve's line again, and I don't know what's going on. Actually, it's not his line, it's his PC. We have no idea what the hell is happening.
Yeah.
So
I'm very low tech, man.
Yeah.
My car has a hole cut in the floorboard, and I drive it like Fred Flintstone.
Hold on, he's writing something to me on the chat. Now we seem to have lost him completely now. He can hear us. We cannot hear you, Steve, but he can hear us perfectly.
Huh.
So
we could field some questions.
Are you sure you're not muted, Steve?
Okay.
Oh, you're back.
I'm back. Yeah, I'm back. Okay. You know, just to give you an idea, I've spent the last 2 hours before the webinar started trying to get this to the bottom of it. I mean, I even had I changed my router. I had my service provider actually restart my line and have a look into my lines detail from their end. And, you know, I seem to have like perfect speed tests, but as it seems, just, you know, GoToWebinar seems to be going off on occasion. If that happens again, I'm going to connect actually from my MacBook that's next to me to see if that's going to make any difference through Wi-Fi. So Stelio, let me know if my voice gets lost again, and I'm going to connect from elsewhere. So let's go back to this until, or, you know, let's hope it doesn't happen again. So I was saying that if USD CAD comes back and retests this channel, that's going to be a perfect opportunity, I think, to be looking, you know, for a long position. I think that now, as long as we stay above like 130, we should be looking higher. And as I said, 133 is a target I like. By the way, one last thing about USD CAD, just look at the RSI profile. We had this descending trend line resistance in the RSI, which not coincidentally, as we're breaking above this channel in price, the RSI is also punching through this descending channel's resistance. So I do think that, you know, this looks very appealing. And at the same time, I'm having a look at the USD NOK. I have to say that I know that theoretically speaking, USD NOK and USD CAD should be positively correlated, right? Because both of them are, you know, they have USD in the first part of the ticker, and theoretically CAD and NOK have like some similar characteristics. Like, for example, both economies are correlated with oil. So theoretically speaking, they should be moving in the same direction, but I can't keep believing that we should see at least one more push lower for the USD NOK before we see higher prices. So I do think that we might get a divergence for a period of time. So this is more or less what I would be expecting having to do with USD NOK. I think this is a decently likely scenario to happen. So I wouldn't be turning bullish the USD NOK just yet, oppositely.
Okay, so he's gonna
connect from his Mac. I'm pretty sure that that machine will work perfectly. So it has to be something on his PC, which is a monster, but I don't know what's wrong with it. Yeah, so let's see if we have any questions or anything for these couple of minutes until Steve connects. What do we got? Welcome back there. Welcome back there. Well, it's all about you. I'm kidding. I'm kidding. No, it's really good to have you back there. So what shall we talk about? Well, I mean, the main thing today again has been the dollar, and it's trying to bounce. I think Blake talked about the Dixie. Actually, let me show before Steve gets here. Change presenter. This is really spooky because show my screen. That's my daughters in the background, sorry. So this is my view on the Dixie. I haven't touched this in months. You remember me showing this, right, Dale? And look how it's following. And if you zoom into the monthly chart, last month's candle was not a good one. Okay, it actually closed on the upside, but it's really it wasn't a great candle. But still, this is what I think is going to happen. Is it going to be dollar weakness? Dollar weakness or euro strength? I don't know. Probably a combination of the two. But I think that we are getting to the point where the dollar has to take a downturn, I think, and this is because Blake has said that where do funds go when there's trouble? It's historically it's been the dollar, and we're seeing the problems in emerging markets, and there's so many black swan events waiting to happen. UK, Europe, you name it. Will such events happen? I don't know, but when there's fear in the market, money usually flows to dollars. Hey.
I'm back and from another computer this time.
Okay, good. So you can try this. But anyway, I was saying that, when fear comes to markets, money usually flows to the dollar. But in my opinion, there are now so many unknowns, when it has to do with the US, this administration, all these, battles that Trump is fighting, with Canada, with China, Mexico, the whole world, basically. It's a low probability scenario, in my opinion, that the US comes out of this unscathed and the big winner. Now this has happened in the past decades. Now the US has been the biggest economy in the world and the most powerful force. But it's a gut feeling that things are a little bit balanced now. I'm a little bit scared about it. It's just my opinion. Anyway, Steve, let's try your connection from this one. Okay, I'm going to pass you the screen.
Okay, let me. Yeah, but do you know which one of the two you should pass the screen to?
No. I try
okay,
one.
Yeah, let me see. How can I grab it?
Glenn Howell, I see you here, so we'll get started in about 20 minutes, Glenn. Thanks for joining us.
Okay, Steve, I'm going to pass you to the second one. I guess it's the second one you joined at. Let's see.
No, wrong one. No? To the other one, please.
Okay, 50-50, and I missed it. Great.
Yeah, it's okay. You had a good risk-reward ratio.
Have you got it?
Okay,
got it.
Yeah, there we go. Yeah, absolutely. Let me get those. Let me get rid of those. Okay, perfect. So let's find out if actually it's the computer. We're going to find out immediately. So let's go. I was speaking about USD NOK. So let's finish up with USD NOK. There we go. So as I was saying, I think USD NOK has one more low, before it moves higher. So let's have a look at crude, because I was also talking about crude. I do think that crude, first of all, I think that crude in the short term is due for a pullback, in a short-term pullback. Second of all, as I had said, I think that if we breached 70, which we have now done and quite comfortably. I mean, we stalled at 70 for a few days, for like 3 days, which makes sense because I remember specifically saying that 70 should at least, even if we're very bullish, 70 should at least stall price for a limited period of time, but still it should stall price. It actually did so. So 70 seems to have done the work, but now we're breaching through. We seem to have some momentum. I do think that the next area of resistance is at 72.50. The closer we get to 72.50, when we actually get a pullback, the higher the chances that 70 is going to contain price before we move higher. So bottom line, I think that crude might pull back shortly, but I do think that the chances that crude is resuming to the upside have increased by a lot. So it is what it is, and I think we have to be looking for higher prices. I do think that eventually we're going to see this 75.40 getting tested and broken. Obviously not an appealing reward to risk ratio to buy here. 72.50 is resistance, but any pullback, if it looks corrective in nature, I think probably it's going to be a good opportunity for somebody to look into buying crude. Now, we had an interesting reaction yesterday from the market having to do with Aussie. This is the other thing I was pointing out to, in actually rebounded despite the Kiwi. Stelio, have you actually lost me?
We lost you for a couple of seconds. It's okay. It's okay. You're back. You're back. You're back.
Okay. So, okay. Then, because I'm on Wi-Fi now. I'm not even, on the network. Okay. 71.60. You can see this area. A major low here, a major low there. So a major low in the end of 2016, a major low in May 2016. So despite, for example, Kiwi being lower, Aussie did rebound from there. We retested for a second time this same level today. I do think this level is very important for the market. It has been in the past. And I will say once again that Aussie is definitely bearish as long as we remain below 75 cents. And eventually, I'm even looking a little bit lower. The 71 cent area is the 161.8% extension of this recovery higher. But I have to say that obviously the Aussie's momentum, bearish momentum, has been waning. And I wouldn't like to try to sell this late into this move, because I really have the feeling that at some point the market is going to squeeze shorts, in a not polite way. Regardless, Kiwi does, is very heavy today. Actually, it pushed to a new low. As I was saying in Kiwi, when we were getting rejected from this triangle support that acted as resistance, I really wanted to see Kiwi down at the 65 cent area. Why? Because this is a triple confluence of supports, and I think we're going to make it there. And if we actually do breach that area as well, I will then be looking for the 161.8% extension of this move higher, which comes at 63.75. So both Aussie and Kiwi remain bearish, but as I said, I wouldn't want to chase this late in the move, right? So, this is something I want to make very clear. Now, another pair that acted beautifully from a technical perspective yesterday, I know it's not the most popular one, but, I was monitoring it closely. The weekend analysis that, we are at a confluence of multiple supports where we closed on Friday. You can see it here. It's the Aussie Kiwi it was moving higher within this channel. On Friday, we actually closed just on this confluence of supports. What are those supports? It's the 200 DMA, it's this channel's support trend line, and the 1085 area has been acting as support and resistance multiple times in the past. So also the 50% fib of this corrective move higher. So I have to say that first of all, remains within a symmetrical triangle. You can see it here, right? Very clearly a symmetrical triangle that dates back to, what is it, like 2014. So don't get chopped up. We are, more on the other hand, if you're looking at it shorter term, in order for me 1085 to the downside, because as long as we're holding this, you have to respect the possibility of pushing higher once again, right? Why not even towards this triangle's resistance? So Aussie Kiwi, nice reaction from a key level. Now let's go to let me see, Stelio, can you give me some questions?
Yes, hold on, let me have a look. We have a question for oil.
Yeah, we answered that, but we have a friend that is asking about the Swissy. I don't know if you remember, Stelio, the other day I was talking with Blake when we were talking about the USD Swiss, and we were exactly here in the Euro Swiss. Now I'm showing you the Euro Swiss because we have a friend asking why is the Swissy so strong. So one thing I want to point to having to do with the Swissy is one of the reasons why Swiss is very well bid is the fact that after finding this 120 resistance, the Euro Swiss has been depreciating. From a technical perspective, it has acted perfectly. I mean, we planned over. This move was clearly strong, so I was expecting a follow through. The corrective move was a pennant. We actually drew this line here when we were there. We broke through the pennant. We bridged through this horizontal support area, and now a few days ago when we were talking with Blake, I told him that listen, Euro Swiss is currently retesting previous support as resistance. So we have to keep in mind that perhaps we get more Swiss franc strength if Euro Swiss gets rejected from here, and that's actually exactly what happened. And this is definitely one of the reasons why we're seeing the Swissy, being well bid. Now, let me see where the 161.8% extension is. And as you see, it confluences more or less. It comes very close to the equality target of the first leg lower, this one, with this one. So we have a target of equality at 110.70, while the 161.8% extension of this corrective move higher comes just a little bit higher at 111, so like 30 pips higher. So within those 30 pips, roughly at 111, we have strong support. But I do think that the Euro Swiss has a big chance of making it there before it actually recovers further. Now, having said that, look at the area from which the USD Swiss reacted from. We had marked this area in advance. It's previous area of resistance, acted this time as support. We now seem to be retesting this broken trend line again as resistance and the 200 DMA. I think that we should at least expect the USD Swiss to break above 97.50 before we can even consider any bullish scenarios, right? But I do have to say that this candlestick a couple of days ago was quite a nice reversal warning. Today we're seeing some nice follow through. So if for some reason Euro Swiss stops depreciating, that should also help quite a lot the recovery for the USD Swiss. I have to say that if you look at the big picture, I'm still not very convinced that this move lower is something major. I do think that this move, I was
correction is going to be smoother, that it's going to be like, better behaved for the bulls. It wasn't, but I haven't given up to the possibility that there is more upside. So, I'm monitoring.
How about a right shoulder, Steve? If they took it lower a few hundred more pips, it would have equality with the left side. You see that? With what happened in June and July, if we got down there, it would look like a pretty good head and shoulders.
You're referring to an inverted head and shoulders formation, right?
Yeah, head and shoulders bottom.
Yeah, sure.
So if we went down to 94.5 or so, it would have pretty good symmetry with the left shoulder. You have that neckline at 101. It's a possibility anyway. You know me, I'm
it absolutely can happen. There's no question about it. It absolutely can happen. Yes. Okay. There's no question about it, Dale.
Just something I noticed.
Yeah, absolutely. I think it can happen. But, for the time being, as I said, in the short term, I'm really interested in this 96.50 area. As long as we rebound from there, and if we clear 97.50, we can then watch for 98.60 to act as resistance, and we take it from there. Definitely, it's not a pair that makes me feel comfortable for it to just buy it here. Right, I will need to see a lot more evidence, because the price action lower, as I said, was not what I expected initially. Initially, I was expecting, a much smoother ride for the bulls lower, but this didn't manifest. So, I have to take that into account. Let's have a look at the DXY. DXY, what I want to point to is that, this trend line acted as support. We seem to be rebounding, but so far, I'm not really enthusiastic with this rebound. I'm absolutely not sure that the move lower for the dollar is over. I actually think that there is a decent chance that there is more downside for the DXY, at least one more leg. But the previous trend was higher. I mean, in the short medium term. So I have to be cautious as long as we're holding this level. One thing is for sure, if we do end up clearing this level to the downside, I don't think there is anything much that's going to stop the DXY to make it all the way down to 92.70. So I do think that if we clear this previous low, 90.70 is the next target. I think it's going to be a nice ride, getting some exposure, being short the dollar, because this is a decent move that can follow. Stelio, give me more questions.
Yes, please. Our friend Nick is asking for DAX and bunds, and another friend's asking for.
Oh yeah, by the way, thank you for reminding me. Yeah, thank you for reminding me, because the DAX is actually attempting to break lower from this 12,100 area. Right, look at it. We are once again. Let me show you. The meaning of this ascending support. It has, in essence, kept the uptrend that we had in the DAX since the correction was over in 2016. Now, what was it, 10 days ago? We actually broke below it briefly, very briefly. We then went back into this, you can call it plan. Now we're plunging lower once again, and today's candle seems to be quite aggressive. And it seems that we're going to retest this 12,100 horizontal support area. If we break that, we're definitely going to make it to the 11,800 area, and 11,800 is a very critical area for the DAX. And I just switched to another tab that has the weeklies. 11,800 is actually the neckline of a very, clearly defined head and shoulders formation, and the major one. You can see, I mean, this head and shoulders formation, if it proves to be one, has been forming since February 2017, right? So it's like almost 1.5 years that the market has been creating this head and shoulders formation. Neckline is at 11,800, and I do believe that if actually the market breaches that level, bulls are going to be in serious trouble, because obviously everybody that is watching from a technical perspective, the market is definitely going to get very, very bearish the index. So 12,100, first area of support, quite an important, quite a strong one. It has already produced bounces twice in the very recent past. And, once we clear that 11,800, and that's the absolute key level for this market, I would definitely not want to be long the DAX if we break below that. Now, the FTSE, there are two possibilities here with the FTSE. There was a possibility of a flat bottom triangle. We seem to be breaking below that, but there is still the possibility of, let me clone this, of depreciating within a channel. So we also have this potential, right? Finding again support there. As you see, within a few days, it also confluences with a 50% fib of the move higher. So far, this move lower definitely doesn't look impulsive to me. So, my thesis that I would rather be finding opportunities to eventually get confirmation that, this correction is over and buying the FTSE instead of anything else. I maintain this bias. So I do still believe that the FTSE has a very decent potential of resuming its move higher. Now, having to do with, yeah?
Oh, Steve, I was going to ask you if I could see your VIX chart, because the behavior of the VIX the last couple of weeks has been, with the blow off in the market, the VIX kept holding up. So I was wondering what your look was on the VIX. Oh, you don't have your lines anymore. Okay.
No, I should have my lines. Let me, because, this is, okay, there we go. Let me switch to, it's obviously a different ticker. Because there are a lot of, where do I have it? There it is.
Okay, so we haven't broken out. All right.
No.
But look at that, pretty good behavior with what the market was doing last week, don't you agree?
Yeah, absolutely. We're still seeing some clear divergence here in the VIX, and I mentioned it actually last week when I was talking on the webinar with Blake. I told him that, listen, I still see some divergence here. I mean, we posted a low that took us all the way down to 10 almost. And, we're definitely not anywhere near that, while the S&P,
the NASDAQ, the Dow,
the NASDAQ, the IWM, the Dow,
everything.
Not the Dow, because I was about to say about the rest that they were pushing new all-time highs. The Dow was pushing higher, but not to all-time highs.
Just new recovery highs.
Yes, exactly. And this is the most important chart if you're looking at stocks, in my opinion, at the moment. The most important chart, right? It's the Nasdaq. Why? Because as you very well know, Dale, the Nasdaq has been the steam engine of the vast majority of the gains we've seen in the bull market and tech stocks in general.
Yeah.
Sorry. While clearly I'm viewing this as an ascending wedge. I mean, so far it looks like an ascending wedge. So I was pointing perhaps towards this confluence of the 161.8% extension of the last corrected move, which coincides exactly. If you notice, the only way you're going to see that there are two 161.8% extensions at the exact same level is because this line is a little bit thicker. Because trust me, they coincide to the peak. One of them is the 161.8% extension of, let me switch the highlighter so you can see, of this move lower. And the other one is the 161.8% extension of this move lower. So they meet exactly at least 7,740 area.
What made Amazon explode last week? Just an upgrade where it rallied like about?
They definitely upgraded the target. I can tell you that.
Oh, that was it. Okay. So what's your ultimate target in that one? If we break the wedge, you had a red line heading down. Yeah.
Speaking of Amazon, here is Amazon.
Yeah. Throw over.
And it looks like a throw over in a very well defined ascending wedge. So let's see if that's the case, because RSI was also breaking higher. If that's the case, that's going to be a huge trap, right? A huge trap. And I always love doing that because it's so amazing to watch. I mean, I just switched it to a weekly. It's so amazing to watch that it's almost unbelievable. First of all, weekly RSI is like at 86. This is unsustainable, right? And most importantly, if I zoom out.
Yeah.
Just look at this.
Can you spell?
I mean, this is the epitome of something. Yeah. I mean, exactly 10 years ago, when it bottomed out, during the Great Recession, price was at 40, and it's currently above 2,000. And the impressive thing is not only that we went from 40 to 2,000 in 10 years, is that the pace of acceleration has been accelerating itself, right?
Yeah.
So, I mean, you've been in the markets for decades and decades. How many times have you seen charts like this? And how many times did they end up in any but one way? Can you remember of any case that?
Sure. Facebook recently.
What do you mean?
Facebook was getting parabolic, and it collapsed.
I mean, do you remember any case that actually the market, when it goes completely parabolic, it doesn't just end up collapsing sooner or later? Can you remember any case that a parabolic move just stabilizes near the highs and consolidates? Because, I mean, the end of these kind of moves is, in my opinion, always the same, one and the same. At some point, the market prices in perfection, amazing expectations, then it becomes a bubble. What is the definition of a bubble? Is that people are not buying anymore because of the underlying value. They're actually buying because they think that there is going to be somebody that's going to buy it at a more expensive price from them, right? And then something happens. Yes, something happens. I mean, there is some kind of a trigger that bursts, a little pin that bursts this bubble, which in a sense a bubble because it's a sentimental psychological phenomenon. So it's easy to burst. Something happens and it bursts that, and then everybody that is holding something that they know that it's overvalued, but they were just hoping to offload it to somebody else at just a better price, they all get panicked, and suddenly you have a market that has no buyers, in quotes, no buyers. I mean, because there's always the same amount of buyers as sellers, but it has no willing buyers at those prices, but tons of willing sellers. And that's why we see those. Yeah.
My guess is the pin is going to be the Trump administration. But we are about 3 minutes into after 6, Steve, and man, you still, you give one of the best recaps of the markets on the net. And great to be back. And Glenn, thank you for your patience. So if it's okay with you, buddy, I'm just going to go to give Glenn the controls here and find out what's happening on the ground in South Africa. I believe that's where he's from. There you go, Glenn. Looking forward to hearing your voice and seeing your screen. There is a screen share option for you.
Hear me all right there?
Yeah, hi. How are you, Glenn?
Yeah, very well, and you? Very well, and you? Thank you for the invitation.
Oh, you're welcome. Are you Corin's friend?
Yeah, I work with Cornet. That I do. I apologize in advance for whatever he said.
Oh, well, he made a good call being bearish euro in the mid 120 level. So yeah, because there aren't that many of you guys in South Africa, right? I think he said there are only 3 or 4 or 5 licensed FX brokers there.
Yeah, we're pretty small in number. We're the absolute number I'm not too sure, but certainly a handful that focus in the FX space. At least licensed to to trade other people's money. But yeah, just on his euro dollar call, I remember that if only he traded the thing.
Yeah,
I'm kidding. He
did take easier to be an analyst than execute the strategy, right?
He's a good trader. He's a great trader, and he had a fantastic call there. Yeah.
Yeah. So let me ask you, before we get to whatever's on your radar, and I went to your, looks like you're winding down your at Practical Pips website. So what would be the best place for people to get a hold of you after the interview? I usually ask this later. And I'd like to know what it's like on the ground there. Last time I talked to Corne, you know, you guys were having trouble in South Africa. I don't know why you're classified as an emerging market when, you know, I think that it's pretty mature. It might, maybe they just throw anyone having political, economic problems into an emerging market. So the U.S. may be there one day. Let me ask you, what's it like on the ground in South Africa, and what are you doing with your own currency? Do you hedge? You know, you probably get paid in the rand. Do you hedge it? What do you do, and what's your outlook for the rand here?
Yeah, sure. So we actually we had a GDP print that came out today, and we are now in a technical recession. So that's 2 quarters in a row, and that obviously puts us in a technical recession. And all the sort of forward-looking markers are suggesting the same thing, that we're not about to, sort of come out of it. So it's kind of more of an official view on what we've all sort of known for a while.
Do you have an inverted yield curve there?
To be honest with you, I'm not too sure. I don't trade too much on the bonds and the yields and the treasury.
I know that's what a lot of U.S. traders are focused on, and actually, I think that's what Powell, who came out after his nomination as a big hawk, kind of backed off a little bit on his speech at Jackson Hole of being a hawk, because they're worried about that. So, so what do you do when you get paid in rand? Do you convert to dollars, or are people there seeing the value of perhaps crypto while their currency is under assault?
Yeah, there was a point towards the end of last year, sort of November, December, where South Africa was the highest ranked country in the world for Googling cryptocurrencies, right? So there was a massive drive. Yeah, it was crazy. There was a massive drive, and it's obviously tapered off. As I'm sure you're aware, that the interest globally has just dropped off as the as prices have plummeted at the same time, right? It's not nearly as exciting as it used to be, but there is a lot of hedging. There's a lot of, as an individual, there are a lot of people that are moving money out of the country. We base our business in dollars anyway, in United States dollars. We always have.
Okay.
When we're pricing in risk and when we're taking positions, we're doing everything offshore anyway. So we focus in the offshore markets. That's where we trade anyway. So as far as our business goes, we are a natural hedge, ourselves, because we're trading in dollars within earning in dollars. But the situation in the country remains the same. There's not too much we can do about it, right?
Right. So, what's your view on the dollar? A lot of people are thinking that high at 97. And the Dixie may have been it for a while. Maybe 92 is in the cards before a resumption of the bull market in the dollar. What's your view on the Dixie or the euro?
I was having a look at the dollar index, and the euro and the dollar index. I mean,
Can you share that chart? You have the chart with you?
Yeah, I don't, unfortunately. I've got another one that I'll put up in a second.
Oh, okay.
But it's for me, it's always been a case of the two of them, both the dollar index and the euro, are not particularly tradable in my mind at this time. When I look at a market, I don't really aim to make long-term predictions. I say, how can I take advantage of where this is right now? And the dollar index, as far as I'm concerned, is sitting in a big old box. And right now with the euro, we've seen a bit of strength lately, but I need it to really pop higher before I get interested into it.
What would convince you? Over 120?
Yeah, I guess around about 118, 120, and then I'd be keen to go long on the euro. The short side, I don't know. It's even harder to call at the moment. I think there are just easier markets to trade.
What are they?
Let's pop ahead.
I like easy.
Yeah, I like easy. So maybe
I like luck. I like easy. At times I'll even put my cursor over the candle, Glenn, and try and move it in my direction.
Yeah, well,
you ever try that?
You can clear at it. It helps, right?
Yeah, but someone tried a magnet that didn't work either. So what are the easy setups that you're talking about here?
So let me jump ahead. Yeah, what I did is I kind of moved a few charts onto sort of a PowerPoint chain in case I was having any issues with our connection. I copied a couple across. So let me run through it. Let me know if that works. So that's me. All right. I'm a professional trader. I'm a regulated money manager here in South Africa. I've been trading for about 14, 15 years, full time for the last 4 or 5 years. As I said, I work with Corne Smith. He was the one. I think he called you high live. At least that's what he tells me. So I'm going to let him have it.
It was there. Yeah, it was in the area.
So
it's on tape. It's on tape. You know, if you don't believe it, we record everything you say will be on video too. So go ahead.
He'll have it on dial on his phone. But yeah, I am a very boring trader. I don't. And I'll say I don't really make too many predictions about where I think the market is going to go. I really just follow price. That's what I've ever done. But I thought there were just two things that I wanted to share with you guys today. So I work with a lot of traders. I work with a group of probably half a dozen professional traders that have a lot of value and that they provide me with a lot of value. And something that it's really stuck out to me in the last couple of months that I thought I'd share. It's very brief, and then we'll get into a couple of the charts. So this is the most important thing that I think traders need, and the most important thing for traders. And it's not your broker, it's not your system, psychology, hardware, markets, you know, the car you drive, your discipline, your trade management. It's something more fundamental to that, and it's what drives my trading and my success in being able to manage other people's money. And it's your values. And all I wanted to say about that is the values that you have are going to represent the things that matter most to you. And this is how you accomplish and achieve the results that you want in trading. So very, very quickly, you know, if you want to translate this into something practical, I know it's perhaps a little bit abstract, but abstract. So, you know, if a trade moves against you and you've got a stop loss sitting there, and how many times have you you know, and we've all done this. I'll be the first one to admit it. You know, you remove your stop, or perhaps you widen it, or something along that.
And you know it a CIC, cancel if close.
Yeah, exactly right. And you know, you move your stop, you do something like that, and you wind it, and you learn. Of course, you know, you're going, well, you know, I shouldn't do that. I shouldn't move stops. And the problem there for me is not so much the idea of moving stops. It's what do you value more, right? You know, if you're going to say to yourself that one of my personal values is commitment. If I commit to a set of rules, then part of my values are included in following those rules, right? And I think if traders can translate some of this stuff to their own trading, it makes it a whole lot easier. So just maybe an idea, my own little tip to guys out there that are perhaps learning, that are perhaps struggling, try and associate what matters to you. So, you know, if you value consistency, then translate that into actual parts of your trading plan. Are you going to consistently risk 1-2%, whatever it is?
Walk the talk, right? Don't just talk the talk, walk it, right?
Exactly. And bring it down to your level, to who you are, to really core of who you are. And you'll find that you actually don't want to go against your rules, because you're saying, you know what, this matters more than moving a stop loss. This is about who I am as a person. And anyway, so I just wanted to share that idea very briefly. So
it's a great. I've never heard it before, but in those terms. But it's a very but it's true. You're right. So maybe that's why we feel some embarrassment when we do make those types of mental lapses and mistakes, is because we know that we weren't following through with. We didn't have integrity with ourselves.
Yes, that's exactly it, right? And at the same time, you have to be able to forgive yourself. You know, if you make a mistake and if you acknowledge it for being a mistake, you say, that's a mistake, I'm going to move on, I'm going to follow my rules. You know, no one's perfect. But the point is that you're not saying, wow, I made a mistake, I'm useless, here comes the revenge trade.
Yeah,
you know
or
I mean?
Fetal positions. And, you know, I use a sports kind of metaphor. Tell me if you agree with it. Like, you know, I'm a big American football fan. So after a quarterback throws an interception, he doesn't come back into the huddle and go, guys, I just don't know if I could do it anymore. I've kind of lost some of my confidence. And do you think that maybe you guys could just run the ball for a while because I'm afraid to throw a pass? And no, he says next.
Yeah, absolutely. He wants to keep going, right? He wants to keep going. Yeah. So anyway, I just when I was sort of putting this together last night, and I thought, well, you know, I quite often I keep my trade station very separate from my sort of work PC. So I log in, I take positions, I log out, and I walk away. So you know, I'm not able to just quickly whip up things like that. So I just I took a few markets that I'm looking at the moment, and I thought, you know, I'll tell you why I'm looking at them. You know, why they interest me, and yeah, that's what I have here. So I added the rand as you were talking about it earlier. I thought, well, you've kind of brought it up, and you've got a trader from South Africa, so I better put it in. So we've got the first thing that I marked there is that big spike up that we see in early August, and that was really at the same time as the lira, you know, obviously the Turkish lira went crazy, parabolic against. And I think, you know, there we were hit with a bit of this sort of emerging market jitters, if you will. You know, all the headlines came out, all the news stations were, they were talking about emerging market, this emerging market. And that. At the same time, we do have what I've written there, 0.3, which is a fair amount of political uncertainty going on. So it's basically a political shift away from honoring private property rights, but it's very vague. You know, so, and of course, you know, investors don't like to hear vague things. You know, that they want to know if they're bringing money in and they're buying land or they're investing in industry or whatever it may be, that they know, you know, where their money is going and how safe it's going to be, and that there's some sort of, you know, at least there's a guarantee of return and things like that. So,
are they talking about nationalizing the mines there too, Glenn?
There has been, you know, I must admit, the mines have been, you know, obviously within the political spectrum, you will get elements that are making a lot of noise that the sort of majority are not too interested in. So, the mines, there has been talk. I don't, at this stage, you know, obviously that might change, but at this stage, I wouldn't say it's too serious. For now, it's more of a land question. So with, you know, it's more of a private land and targeting what they say is unused land, but you know, it's again, it's very politically motivated. So you know, what's unused land is potentially an investment to someone who bought it many years ago with the intention of selling it. I mean, that's capitalism, right?
It sounds like Marxism.
Well, yeah, exactly right. It's certainly a big shift, to the left. But it is unfortunately, because we are less than a year away from elections, the sort of the ruling party isn't being too specific on, you know, what they mean and what they're going to take and what they're after. So the end result is that vagueness, because I do think that they don't really want to cause absolute chaos, but you know, that vagueness that they are that they're perpetuating by not giving answers. Well, you can see the result here, right? You know, that the currency is taking a knock. Our local equities if you price them in dollar terms, haven't gone anywhere in 5-6 years, right? So there's certainly, there's a lot of issues on the ground.
Okay. You ever think about relocating?
Yeah, absolutely.
Sometimes when you're in a storm, sometimes when you're in the middle of a storm, we all think about, you know, where would be a nice haven. Have you given that any thought?
Yeah, so you know, a lot of people in the country got family overseas, and you know, a lot of South Africans have immigrated to Australia, New Zealand, have been, you know, always fairly popular destinations. At the same time, you know, it's a country where the worst never happens and the best never happens either, which is a kind of a funny way of looking at it. But it's you know, it's a great country. We have a lot of really good.
You love it. You love your country.
Yeah, absolutely.
Okay.
You know,
I understand that.
Yeah, you know,
you may not love the politics, but you love your country.
Who's ever loved a politician, right? I mean,
I don't know. Politicians. All right. So what's next on the agenda after?
Yeah. So, sorry. What's that, Dale?
What's next on the agenda after this slide here?
Yeah. Another couple of markets that I wanted to have a look at. So it's more of my sort of trading philosophy. So I took these shots towards the middle of the US session yesterday. So I know they're a little bit out of date. I do apologize for that, but it doesn't really change my trading plan too much. So as I said, I'm a boring old trader, right? So pound dollar for me has mostly been going down. I can call my 6-year-old daughter in and I can say, hey, is that chart mostly going up or mostly going down or mostly going sideways? She'll say mostly down, and I'll give her a sucker, and I've paid my consulting fees.
Like it.
You know, but you know, if you want to throw a trend line or a moving average, whatever the case, you know, I'm happy with all of them. For me, simple lower lows and lower highs that I've tried to mark them in there. You know, I'm still keen on shorting this sucker, and we've now had a break of that little gray dotted trend line that I drew at the bottom, and I think we're going to see continued downside until I start seeing, you know, price reversing this pattern, producing
higher
some
lows.
sort of
higher lows, higher highs. Yeah,
exactly right. So that's all I'm after. I lock in a position on that. I typically don't go for fixed profit targets. I'm very conservative on my risk. I typically only risk a single 1% on a position, but I will aim to sort of ratchet that up as price goes, right? Moving along, locking in each sort of R. Perhaps if we catch a nice decent trend, getting an 8, 9, 10 R trade in at some point, but that's really all I'm after.
Okay.
Well, let's keep going. So the Kiwi was another one. A couple of your speakers mentioned the Kiwi, and I liked it too for exactly the same reason. You know, same kind of thing that we're going on here. I'm still looking for more downside. I know that it's since reached that low, that the last low that I've got drawn there, sort of early August. I know it's reached that this morning there, but doesn't really. Again, it still doesn't really change anything for me. I would expect that low to be taken out, another pullback on the high, and again another short. Right.
Okay.
Yeah. So these three are the same, very similar, and then there are another two that are a little bit different. Same kind of thing on the pound Swissy. I quite like that. I mean, that's just fallen off the cliff. I know there's a gap there, and you can argue whether it's closed or not. I guess it probably technically has on the wicks. I mean, again, I don't really care. You know, it's just falling off the cliff. It's going down for me. I don't see any reason to buy until it stops going down. Right. So those are three sort of in the works for me that I quite like, and then these two were two that I've been monitoring for quite a while. So I marked this one up a couple of weeks ago. This is the Euro Aussie, and it hasn't really produced that high structure yet. But you know, and I know a lot of traders are looking it up there for a double top, and of course, you know, if it reverses, great. Then perhaps we need to start looking for shorts. But for me, given how it's blasted right up there and it's just sort of sitting there right now, I'm going to start looking for that trending structure. All right. So the first sort of pullback and bounce, that's me. I'm in. So this would be kind of an early stage trade for me.
Yeah, because it looks like based on the formation from that low in late May and the recent resistance, you have potential for 170 just based on the arithmetic of the formation.
Yes, yeah, correct. Absolutely.
Okay.
Absolutely. Yeah,
nice
yeah. So that's kind of an early one for me. Well, let's keep going. The dollar CAD, the loonie, I think someone else mentioned. Yeah, it's broken up there. You know, someone else mentioned that one. It's funny. This is an interesting chart. If you put it on a weekly time frame, you certainly see the opposite. You'd suggest eventually a breakdown lower. But I mean, again, I like this for the upside, right? We've got this push up. We've got this channel sort of structure, and again, more upside. Now that we've got the breakout, I'll wait for potentially a retouch, and then go long, just ride along with price.
Okay. So. You said you're a money manager. How is it structured in South Africa? Similar to a CTA here in the States? Is there a regulatory body? And how do you set up accounts with power of attorney? And how do you get paid as a money manager there?
Yes, yeah, all great questions. So it is certainly regulated. We have what's known as the Financial Services Board, which has actually just undergone a change. They're now the Financial Services Conduct Authority, and they're remodeling a lot of what they do based on the United Kingdom's Financial Conduct Authority. You know, a couple of the sort of the changes that they're making there. So they regulate the financial industry as a whole.
Okay.
Within South Africa, so that will include everything from banking to insurance to to trading to these kind of managed products, which is what we have here. So I am licensed under Ubuntu Markets. Let me we'll go back to that. We'll go to the next slide in a second. So yeah, so I'm licensed to take client funds. What we do is we run them in segregated separate accounts. We don't combine them in. Yeah, we don't combine them into.
Yeah,
no pooling at all. So we keep them in segregated client accounts. They get sent off to the LPs. Obviously the funds get sent off to the LPs, and yeah, we're mandated. So as you kind of mentioned your LPOA, we don't accept an LPOA just because for our regulations they're actually not robust enough. We use a fairly stringent, strict document, quite comprehensive, which is a mandate, and all it does is it mandates what I'm allowed to do for my clients, right? Which is obviously.
Can you take clients from? Can you raise money all over the world, or are you limited to your country?
We can raise money all over the world. We take clients from all over the world. Okay. Yeah, we don't have an issue with that. Obviously,
what's your account size? What's your account size minimum?
$10,000.
Okay. Worst drawdown in the last 2 years?
15%.
Okay. So that's what I used to look at. Everyone looks at the gains. I want to know how bad. When it's bad, how bad is it, and can the guy recover from it? So
and how long did it take you to get out of it, right? How long were you sucking mud before new highs? Yeah, absolutely.
Right. So I mean, that tests the mettle of a trader, and how they react to it and manage not just the markets but themselves. So how would people get a hold of you then, Glenn, if they were interested in continuing a conversation and discussing this?
Yeah, okay. So I've put it up there on the slide. I mean, you can email me there. There's our office number, and our licensing is at the bottom there under the Financial Services Board of South Africa. But I'm certainly happy to elaborate and explain more of what I do. And
your Twitter handle that you'll probably be the most active on, is it going to be at Ubuntu?
Ubuntu Markets, yeah.
Okay. All right. Well, what a pleasure meeting you, and what an interesting take on comparing people's value system to the effects of their trading. And some great looks on a couple instruments. It was very, I learned from you today, my trading warrior brother.
Thank you very much, Dale. I appreciate it, and I appreciate the
Hold on a second. I have to move my stop. Just kidding. It was getting a little. I'll leave you with this, Glenn. The last time I used a mental stop, my first stop was a mental institution.
Yeah.
Anyway, say hi to your partner. Say hi to Corne for me, and I think I have him in the schedule down the road, and would love to have you back, and appreciate your time and sharing your story, philosophy, and some of your views on some of these different instruments. I really appreciate your time today, Glenn.
Thank you, Dale. I appreciate the opportunity, and I wish your traders the best.
Good hunting, buddy.
You too.
Okay, that's it, Faze. See everyone today was Turnaround Tuesday. See everyone tomorrow. I have Victor Zubarev with us tomorrow. Remember, don't just count your pips, count your blessings. See everyone then. You see in the members chat, Blake and Steve are in there right now. And I'll see everyone tomorrow. Adios.